Hey everyone, welcome to the channel. I'm Doug the Retirement Guy. We have the weekly update of the GraniteShares Weekly-Paying ETFs. We're going to review all 16 of them, give you guys the good, the bad, the ugly of what's happened this week. Before we do, gotta give a shout out to all of our Patreon supporters, all of our YouTube subscribers, and most important, all of our YouTube members. You guys are just popping up on the screen, doing well. Don't be afraid. Join the community, help support the channel, become a YouTube member. Well, if you're not part of the community, if you're not part of it, don't be afraid. Hit that subscribe button, hit that bell notification. Everything helps the channel. So let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This information in the video is for educational and entertainment purposes only. If you are looking for financial advice, always contact a financial advisor. I am not a financial advisor, and I don't plan on giving financial advice. So we're going to take a look today at the funds, the growth or the value of the funds that they have done. Now, when we take a look at this, we will see it was not a great week. Most of the stuff is down. But the positive ones that we have is the Amazon yield boost was up 3.79%. The next one into that one is HOYY, the GraniteShares Yield Boost Robinhood ETF, was basically up 1.31% over the 1 week. And then we have the two new funds, MAAY, which is the yield boost for MARA, and then IOYY, which is the I call ONQ, but it's ONQ ETF. Both of those were virtually, they have a positive growth this week from when they opened up. Overall, the funds, took a little bit of a hit for the value of the growth. When we took a look at the yield to date growth side of it, you can see they still have a few funds still in the green, holding on slightly, but a lot of their funds have definitely slipped into a small negative growth. So let's get into the next part, and that's going to be the funds distribution. This is where GraniteShares really produces. It gives you that potential income and very strong dividend payouts is possible week in, week out. When we take a look at the two new funds, actually were the highest payouts this week. IOYY paid out 70.24 cents, and MAAY paid out 67.92 cents. So very, very strong payouts. They did not use any return of capital, so those were real, true, hardcore profits from the premiums that they sell to generate those dividends. Looking at the current ones that have been out there, HOOY would definitely be right there at 58.3 cents, down a little bit from last week. And then SMYY, the Yield Boost SMCI ETF, again, 56.95 cents, down a little bit from last week. You can see we did not have the volatility that we needed, but still generated some fairly promising dividends across the board. When we take a look at the distribution rates, we will give you the very first one is COYY, the Coinbase one. They are still holding on to 153.80% distribution rate as of the publication from GraniteShares this morning. When we take a look at the forecasted of IOYY, they're at 153, MAAY at 147. You look at a lot of their distributions. SMYY, 142.09%. TSYY, 139.78%. HOYY, 139.41%. The GraniteShares give some nice distribution rates across the board. And they don't always use the return of capital. We give you the report here. You can see many of their funds are zero, which are some positive things that we're seeing from this fund over a period of time. Now let's take a look at the fund's distribution ratio. We use this for a particular reason. I use this in my portfolio to find out who's going to generate the most money for me this week. And when you take a look at GraniteShares, they've always beaten everything else I have in the portfolio. And I like that part of it because I'm here for income. I want big income from my portfolio. And a lot of my funds I am slowly changing over to the GraniteShares because of this one screen right here. And one thing mainly is that they continue paying out that 2% or higher from the portfolio. So when I look at this now, you take a look at COYY is at 2.94%. So this is the new dividend divided by the basically what is the percentage of the price of the share to the new dividend, 2.94%. Now, number 2 and number 3 are brand new shares. They're brand new, but they both came in at 2.82 and 2.85 respectively. But look at the rest of the funds. And I highlighted everything in blue because anything over 1.5% is what I classify as very high yield and produces a very nice dividend. So if you can go ahead and compare, and one of the things that I know everyone talks about, ULTY, they are always been the big income ETF. They come in at 1.63%. So anything above 1.63 is going to give you an additional income over the number one, the king of it all, ULTY. So look at how many shares GraniteShares puts out there. Now I know these are yield boosts. I know they're independent stocks that they are dealing with. But overall, if you're looking for income, these have the potential of generating large volume of weekly payouts. HOYY, 2.76% on that 58-cent dividend. TSYY, 2.68% on a 20-cent dividend. So we just continue to look at these on a regular basis. Now let's take a look at the distributions and ROI, the return on investment. If you're new to the channel or a reminder of what we normally do, I have a goal. Now, this does not always fit everybody, but I have a goal, and my thumb says this: if anything is under 1 year in weekly payouts, then I'll put it on my list and take a look at and see if it's worth investing in or not. And do some heavy research into it. So that is really what my goal is, try to stay with under a year. And the neat thing with GraniteShares, almost literally all of their funds except 4, so I'd put this about 12 different funds, all fall into below that 1 year category. So on the board, we highlighted the top, basically I'm going to call it top 3. And the first one is COYY. Now what we're doing is we're using the 4-week dividend average to try to give you a closer number. So when I look at it, I don't want to see a 12-month dividend average. I want to see what's been happening, a snapshot today, 4 weeks ago, to the current price. And that gives us 61.61 years or 31 weeks, and COYY with the current average would hold it. And you look at last week's dividend, you look at this week's dividend. Last week it was right on track. This week we're down about 3 cents. So we're real close. So that is what I use to get start to say, hey, look, I got 16 different funds. Narrow it down. I've narrowed it down to basically, you can see here, 4 funds that keep me focused on what's going on. SMYY came in at number 2 at 33 weeks. And then Tesla and MARA both come in at 33 weeks. And you start doing the research, and Tesla, TSYY, has been a 20-cent stock all the way through, and you can see the average is 19.9 cents. This week's brought it down a little bit, and this is why we use the average. So you just got to make sure your numbers are accurate, because if these weeks hold, they'll hold if the average stays the same. It just gives you time that once you get your money back out of the fund, we turn it into a cash cow that you just sit back, collect the dividends and distributions, and whenever possible, and invest your money into either more funds, more shares, or into a totally different package. Now let's take a look at the biggest number and the total return. This is the area that most people should be focusing on. And unfortunately, it is one of my last slides, but it's one of the situations that you should be watching for. Everyone always goes after distribution rates. They chase that big giant yield. They think they're making this big money. Well, I always want to explain and teach people of distribution rate is great, but you got to take your year-to-date growth or loss, add that to it to get a total return. Prime example is the very first one, COYY, the Coinbase from GraniteShares. Largest distribution across the board at 151%. But the fund has also lost 51.83% year-to-date growth. That would give you the best chance possibility of 99.31%. And it didn't make our top 5 list. So when we get down to it, let's take a look at number 1. IOYY. I know this is a new one, but they are distribution directly from GraniteShares is saying they'll be at 150.84%, down 2.08% year-to-date growth for a total of 148.76. MAAY is at 147.09, down 13.85%, 133.24. Now both of those are brand new funds, so I have a feeling that we may see a potential bigger drop in the growth than what we're seeing currently. I would love to be wrong, but overall I expect to see that, so they'll fall. I wouldn't jump on those immediately. Those are just purely what the numbers look at today. But the Robinhood comes in at third place, 139.10, down 16.08. We've seen that had a slight little drop off this past couple weeks, but still pulling in a 123.02 total return. A notable is going to be the SMCI, the SMYY fund, 140.03, down 22.07 for a total return of 117.96. So overall, very good total returns from GraniteShare. They've done well with their distributions. I would like to see them do more with that year-to-date growth a little bit, but you got to do your research, find out, is this NAV erosion or is this just market fluctuation, which some of this is affecting market, but I also agree some of this is going to be some NAV erosion. But if you have large distribution, you can accept a little bit of NAV erosion. That's why we say these are higher income, higher risk. So let's give you my final answer. What am I looking at this week? What is Doug's going to do this week? I am going to research IOYY, MAAY, and I'm actually going to spend more time on AMYY, the AMD package. First off, on the 2 new ones, I want to see what's going on with them. I want to get a little more research into it. We may turn those into a video just to see what my research comes up with. AMD, I'm just hearing a lot of stuff out of that chip maker that it could be the next NVIDIA run. It could be up there as a competitor to it. I just like what I'm seeing so far, but I'm going to do deeper research, which I recommend everyone to doing. When we get into the next category, and that's going to be the dividend ratio, any new money, I'm looking at these same 3. I'm going to do the research up there because each one of them has a nice dividend ratio to play into for potential income for my portfolio. And then total return on investment. SMYY, which I currently own, questioning if I should put more money into it. And then MTYY and XBTY, both of those, I'm looking at those because of the return on investment and other pieces to it. This is my list. I've taken 16 down to 6 different funds I'm going to research. And this is what I do. This is why I do this. It takes 16 down to 6. Definitely easier to do 6 than all 16. But I highly recommend that you guys do the same. Do any of these fit your portfolio? Good question. Leave a comment down below. Would love to hear from you.
Thank you for watching.